Palantir, there it is. Palantir, front page of CNBC. Palantir stock jumps 19% as AI demand drives revenue beat. Always a good thing when one of your stocks is on the front page of CNBC and it's about something good, okay? So we have some things to get into in today's video in regards to Palantir stock. Obviously, the stock's exploding higher. After hours is up over 17 percentage points. We're going to get into the numbers. And you know, when we go into the numbers, we go into the nitty gritty. We're going deep in the numbers. I got some very important things to show you guys that I think a lot of people are missing in regards to numbers, okay? Then we're going to do a huge development in regards to the business model, that it's a fundamental change outside of just the boot camps, okay? And we'll speak about that in this video. And then the last thing we'll get into is my thoughts on buying or selling the stock in this video, okay? All right, guys, so let's start going through this. Palantir stock pops on unwarranted optimism. Avoid. Now, I thought I would just show you this to start out the video because at the end of this video here today, we're going to come back to this. And we're going to talk about, is the pop in the stock price after hours 17%, however much is up tomorrow, is it really unwarranted? Should you avoid the stock or not, right? After beating a relatively small top line beat, Palantir stocks jumped 17%, while stronger than expected commercial revenues, especially in the US, reflect positively on AIP. Palantir's current growth rate and 2024 growth outlook of 20% year over year is nothing extraordinary. Despite a decent Q4 showing, Palantir stock looks significantly overvalued, with potential downside of 33% to fair value. First off, Palantir, you always want to look at, do they beat or miss analyst estimates, top line, bottom line? That's always the first thing you got to look at whenever a company reports, right? And when it comes to Palantir, they meet and they beat. So they met in terms of the EPS, but they did beat in terms of revenue. Was it an incredible beat? No. Was it a shocking beat? Like, oh my gosh, this is insane? No. But it was a beat nonetheless, okay? So they meet and beat. Now, when it came to their income statement here, here's the deal. Revenue grew to $608 million in this latest 3 months. That's versus at the same time last year, $508 million. So they brought in an extra $100 million of revenue just on a year-over-year basis. Cost of revenue hardly went up for the company, only up, $4.3 million there? That's like nothing. Gross profit exploded to $499 million. What this should tell you right here is basically for every extra dollar Palantir's bringing in revenue nowadays, so much more of that dollar is actually going to reach down the bottom line because their gross profit is insane. I mean, it's incredible that their cost of revenue hardly goes up at all, but yet the revenue goes up $100 million year over year. It's ridiculous, okay? So gross profit, $499 million versus $404 million. Sales and marketing came in at $197 million versus $190 million same quarter last year. It doesn't come as a surprise to me at all. If you're going to be investing in the future, you need a sales and marketing team if you're going to continue to have your revenue fly up the way it is for Palantir right now. Now, here's something very strange I saw here. Okay, very strange. So research and development, they're up to $109 million they spent in this latest quarter versus $82 million in the previous quarter. Now, first off, R&D is a negative and a positive. And the negative when it comes to R&D is, well, you're spending a bunch more money. You want to add a bunch more R&D folks, you're going to spend a bunch more money. The positive when it comes to R&D is, well, all those employees working on future technologies and softwares and things like that, well, those people should end up bringing you in a lot more money in the future, right? They're keeping you ahead of your competitor. So it's a positive and a negative. But something very strange here. So if you look at G&A, right, general administrative, that dropped to $127 million. So that's good compared to $149 million in the same quarter last year. So that's good. But it's very strange that you've got a $22 million drop there, right? And if you add $22 million here, you're at $104 million in research and development, right? Which means there's only an additional $5 million there. So what is this telling me? My hunch on this whole situation and why this is so strange is I believe what's going on here is I believe maybe there were some employees that were previously under the general administrative area that they moved up to research and development. Maybe they felt those employees were more research and development related employees versus general and administrative employees, okay? And so that's, I don't have any proof. I'm not an insider of the company. I'm not an executive. I'm not the CFO of Palantir, but that's what it smells like to me because it is a little strange that the movement in the numbers there. So I don't know. We'll see. That's what I kind of thought. Total operating expenses came in at $433 million versus $422 the same time last year. So this is only $11 million up number there. When you got your revenue up $100 million and your operating expenses only is up $11 million, you're doing things right, okay? Now, income from operations up to $65 million, that's versus $17 million operating loss in the same quarter last year. Interest income's up to $44.5 billion for the company, or excuse me, $44.5 million for the company now versus $12.7 million in the same quarter last year. Now, I like to run these two numbers together to kind of see the plus minus here, okay? So if you look at their loss from operations along with their interest income, they were negative $5 million, okay, in this same quarter last year. Versus now, if you take their interest income with their income from operations, you're at about a plus 110 number. So plus about 110 million. So you went from about negative 5 million in the same quarter last year to now plus 110. Whew, night and day difference for the company, right? If we look at the income before income taxes, $106 million versus $37 million in the same quarter last year, right? And that was really helped off this one-time kind of gain here for the company, so do keep that in mind. Net income from the company, $96 million versus $33 million in the same quarter last year. That's it. That's an A income statement right there. Very, very, very good. It's borderline A+, okay? Now, when we look at the balance sheet, there's something fascinating going on here, okay? First off, there are over $3.6 billion now in cash and cash equivalents and marketable securities for the company, right? That's versus at this same time last year, they're at about $2.6 billion in cash equivalents and marketable securities. So they're basically got that number up about $1 billion roughly on just a year-over-year basis. Now, current assets, $4.1 billion versus $746 million. We'll come back to that in just a moment. I thought that was big. Accounts receivables up to $364 million versus $258 million in the same quarter last year. So accounts receivables up, we can call it, what is that, $106 million year over year, roughly, there, right? Total equity on the company's up to over $3.5 billion versus $2.6 in the same quarter last year, right? But here's a big thing, okay? If you look at current assets, $4.1 billion for $746 million in current liabilities, right? So they're about $3.4 billion in the plus, which is ridiculous. Now, there's something in the stock market, it's a very important metric you got to understand, it's called current ratio. And if you have ever gone through any levels of accounting, I did 3 levels of accounting in college. If you go through even like the most basic levels of accounting, they're going to teach you about current ratio, current assets versus current liabilities, right? And if we run the numbers on Palantir here, Palantir's at over a 5, current assets versus current liabilities. So over a 5 on their current ratio, okay? Now, first off, if you don't know if that's great or bad, you got a lot to learn in regards to the stock market. Right off the bat, you should know if a 5 is great, if a 1 is great, if a 2 is great, if a 7 is great, those sorts of things. If you don't know that, folks, you got a lot to learn, okay? Check out pinned comment down there. Apply to join my private group. I teach you all these sorts of things. This is like base level stuff. Like something like current ratio is like base level. Like if you don't know this, you got a long way to go in this game before you can really like sustainably grow your money over time, okay? Here's the deal, okay? If they're at over a 5 right now, the general kind of thinking is you're good if you're 1.2 to 2, okay? So if you're over a 5, you're like astronomically high. Like this basically means like the safety in your business model is like at a ridiculous scale. The safety in your balance sheet is like almost unparalleled. To give you some reference for this, Meta's got one of the greatest balance sheets in the world, literally, okay? If we look at the current ratio on Meta, for instance, it's under 3. And once again, this is one of the best balance sheet companies in the world, Meta. And Palantir's over 5. So Palantir's got nearly a 2x of the current ratio of Meta, which means if you look at the balance sheet wise, technically Palantir's a much safer business model to invest in than even a Meta. If you were just looking at the balance sheet and that's the only thing you had to judge these companies off of, which is insane to think, okay? So the moral of the story is Palantir's balance sheet is almost unparalleled out there, and they got one of the highest current ratios you'll ever see. That is unbelievable, okay? Now, next up here, I thought the lady on CNBC misspoke when I first heard this number, okay? She said, U.S. commercial revenue grew 70% year over year. I said, what? Huh? No, no, that can't be right. Like, that sounds ridiculous. But yes, she was right. U.S. commercial revenue grew 70% year over year. Commercial revenue grew 32% year over year in general. Revenue grew 20% year over year. They closed 103 deals that were valued at over $1 million each. U.S. commercial customer count grew 55% year over year. That's huge. That's something a lot of shareholders have wanted to see. They want to see Palantir starting to grow customers substantially, putting up 40, 50, 60%, 70% type, additions in terms of percent year over year in terms of how many customers they're gathering there. That's phenomenal. Adjusted free cash flow, $305 million. It's a 50% margin. Fourth consecutive quarter of GAAP operating profitability, 11% margin. They got a long way to go with that, by the way. Fifth consecutive quarter of GAAP profitability, generally accepted accounting principles. That's as good as it can get, 15% margin. GAAP EPS of 4 cents and adjusted EPS of 8 cents for the company, right? So now this is a company that quarter in and quarter out is profitable. The old days of, Palantir is just a money-burning company. They'll never make money. Like, that's what everybody was saying in 2022. That was a hater of Palantir stock, which there's a lot of haters of Palantir stock, right? A lot of people don't want to see people make money in Palantir. It's a big, popular retail stock, and so it attracts a lot of hate, very similar to Tesla and a few other stocks out there. And that was their thing in 2022. Palantir will never make money. They'll never make money. They're always going to burn money. Anybody that buys Palantir stocks is a fool, right? If you just understood the trends that were going on in the income statement, you saw, oh my gosh, they're getting closer, they're getting closer, they're getting closer. Like, the trend was, I think, pretty clear by the back half of the year in 2022 that Palantir was going to get to profitability. And once those profits started pouring in, it was going to start ramping quite considerably. And we're starting to see the very infant stages of this now at this point in time, right? If we look at full year highlights, so this was just a turning point year overall. I call this like a Tesla 2019 year, where 2019 was a huge turning point year for Tesla, where they really started to, have their vehicles ramp, started to improve the financials, the income statement in a massive way, and it changed Tesla forever. And I look at Palantir and I see a very similar phenomenon going on here, where I look out at Palantir and I'm like, dang, this reminds me a lot of Tesla in 2019 in terms of just being at that turning point, right? And getting really their bottom line in a great place, and not needing, the top line to be insane. But the main thing I want to draw to your attention here that I think is important to look at versus, quarter over quarter versus year over year, is look at U.S., this is for the full year, U.S. commercial revenue grew 36%, but in the most recent quarter, it grew 70%. So we're talking nearly a double up there, which means there's a fundamental change that's going on for Palantir's business model for the better, and you have to account for that. And when you have a fundamental change in a business model, this changes everything forever in regards to how you're going to value that stock moving forward. When you have an epic reacceleration of growth in a very important category like this is for Palantir right here, okay? So, I'm sitting on 5,555 shares in the public account going in this. I got shares in other portfolios as well. And so based upon just a public account move, based upon the move after hours, that's about $16,000 we're up after hours, which feels like nothing. It really does. It really does. And you know what screwed me is last week, Meta, right? Meta reported that earnings, and I was up $150,000 on that, right? So the dopamine hit from that was insane. Like $150,000 in your net worth up on just a few hour basis. Like, that's a huge dopamine hit. So then Palantir is like, it's having a great after hours, and we're up like $16,000 after hours, but it just doesn't feel the same, right? The dopamine level in your brain just didn't quite get hit the same way it got hit last week, right? And so that's just funny. And you think about it, right? I was excited about the $150,000 up for Meta after hours, but you look at like Zuckerberg, for instance, and Zuckerberg, I mean, he was up, tens of billions of dollars, right? And so $150,000, he wouldn't even notice that. Like, that could go missing, and he wouldn't even know. Like, $150,000 went missing. I had no clue. So that's the moral of that story, okay? Now, when it comes to the stock, and is a stock overvalued, undervalued, is it a buy, not a buy, those sorts of things, okay? In order to understand a subject like this, you have to know how to value companies. And you look at a stock like a Palantir, right? This stock trades at a forward P of a little under 60. That's if this number is correct, which it might be a little low, but let's just say that's correct, okay? So they're trading about 3 times the market roughly. Okay, we can call it about 3x the market. Now, revenue growth for an average stock out there, you usually know is somewhere in the 3 to 6% range, right? Well, Palantir's grown revenues about 20% clip, roughly, right? So Palantir's growing at, let's call it anywhere from 3.5 times to maybe, 6.5 times the market. So the moral of this story here is Palantir should be at about a 3x multiple on the market, considering it's growing at probably 3.5 times to 6.5 times an average stock. But we could take it one step further and we say, well, what's the business that really matters for Palantir over this next decade? And how's that growing? The business that matters by far and away the most for Palantir's business model is U.S. commercial. That's the granddaddy of them all. If we're looking 5 years out in the future, 10 years out in the future, that's going to be it's going to dwarf every other business. It's going to dwarf the international segment. It's going to dwarf the government business and those sorts of things, right? So their business is growing at 70%, which is well over a 10x of where the market's trading at. So when I look at a Palantir, I think the more you dig into it, the more you're like, oh, this stock isn't trading actually that rich. Although it looks on surface value like, wow, 57 4P. When you really run the numbers and the math versus where the market trades at and those stocks trade at, it actually might be cheap here. Cheap. And also remember, Palantir's at the infant stage of profitability. So the moral of this story is that number might be way low for 2024. They might be way ahead of that number this year. Way ahead of it. And people got to consider that as well. So when you look at the stock and you see 57, it might actually right now be at a 47 or a 40 or a 45. And once again, that would only be about 2 to 2.5 times an average stock out there with way bigger growth rates over this next 5-10 years than an average stock, right? So that's something to consider. So we take it back to where we started this video, roughly, was around this. And I'll ask you guys, open it up for you guys. Is this guy wrong or is he right in terms of the unwarranted pop after hours? I mean, first, my thoughts before we get into the Cathie Wood stock or situation here in regards to what she's doing. This is just a lot of excitement around Palantir in these growth rates, a 70% U.S. commercial growth rate. As soon as I heard that number, I knew, when I reacted to the earnings coming out live on Twitch, right? And I freaked out. Once I heard the 70% number, I flipped out. And the reason I flipped out is I knew immediately this is like a game changer for the stock and how people are going to view this. Because when you start to run these growth rates out over the next several years, even if you don't run, a 70% for next year, let's say you have 70% U.S. commercial growth for this year. Then the next year, let's say you have it going down to 60%. Then the next year, 50%. Then the next year, 40%. Then the next year, 30%. Even the numbers start to get so ridiculously huge when you're growing from a 70% growth rate at the sorts of dollar amounts that now Palantir is bringing in from that side of the business. And so it starts to dwarf like anything else Palantir is really up to, the government business, which is a great business, the international business, which is perfectly fine, but the U.S. commercial is going to end up dwarfing it all. It looks like if you run this projections over the next few years here. And so that's where just ridiculous amounts of cash flow and profits are going to come from for this company overall. So very, very exciting in regards to that. Now, in regards to what Cathie Wood is up to here with Palantir, and what are my thoughts on this? So Cathie Wood is loading the boat on Palantir shares after these earnings. Cathie Wood joins Palantir party as ARK Holdings a $43 million stock. Oh my gosh, what is going on here? Palantir shares rallied 30% Tuesday after the company's fourth quarter results in AI opportunity resulted in analysts re-rating their estimates and price targets. Cathie Wood's ARK Invest bulked up on shares on the way up, potentially reflecting the Faith Alex Karp-led company disruptive potential. ARK Innovation ETF, this is the main ARK one, just to keep that in mind. She's got a few different ones, but the ARKK is the main one, okay? ARK Next Generation one also, and the ARK FinTech Innovation amassed 1,967,000 Palantir shares. At a closing price of $21.87, the firm added Palantir shares worth $43 million. What? Palantir now accounts for 1.84% of ARK's flagship ARK Exchange Fund. The stock is the 21st biggest position in terms of weighting in the ETF. So clearly she's loading the boat on Palantir shares. She might be loading the boat again today. Why is the stock up again another 7-8% today, right? Maybe she's out there being a big buyer again of the stock, right? So I understand why she would be buying the stock here after earnings, but on the flip side, I say, if you really paid attention to what's going on with Palantir, nothing should have come as that big of a surprise to you, right? We knew AIP is going crazy. Karp and the team already told us that. We knew that it was going to start to funnel in for numbers here very shortly. And we knew the U.S. was the leader in this market, right? So we knew the U.S. companies were much more likely to adapt. So if you look at the revenue numbers, EPS numbers, and even the guidance, there was nothing really there that was too shocking other than the 70% number. But we already knew it was going to be insanely strong to begin with, right? So, I don't know. She can do whatever she wants and go load up on the shares. It's awesome, but it's because you could have loaded up on a lot more shares a few days ago, right? And so now you're paying a 30%, 40% premium versus where you could buy just a few days ago, right? So